to Afternoon Market Action. My name is Glenn.
And I am Patrick France. Glad to be here today.
You took forever to say that. You're supposed to come right after me and say that. All
I
right.
did.
Whatever. Oh, I didn't put my headphones in this time. I should have done that. We forgot about that, Joey.
Way to go, dummy.
Wow. Wow. All right. Welcome to everybody on YouTube and on Facebook. If you can hear us loud and clear, please chime in with VV Nation and let us know where you're chiming in from. All right, let us know where you're chiming in from. Martin calls us the dynamic duo. Well, that makes me Batman, and that makes you Robin. You're Robin.
No.
Oh, okay. All right, so
I'm too tall to sit in a sidecar.
Well, that's true. You're taller than I am, but I'm just going to be a shorter Batman. That's all. As you can see, we do have a lot of fun, but we also talk about what's going on in the market. Afternoon Market Action is all about what's going on today. And holy smokes, today is truly a bloodbath. Everything is down 3% or more. Mikey is on here from Facebook from Lafayette, Louisiana. I like me some Louisiana. I do. Miss McClintock is here from Southern California. Roger is here from Arizona. I'm looking for Energy. He may not be here yet, but I'm sure he is. I got to shout him out. I'm going to wait for him to pop up. Got to shout him out. Big thing. If you're brand new to the channel, do not forget to hit the subscribe button. Do it now, please. Hit the subscribe button, hit the bell icon so that you will be alerted to when new live streams or videos that Patrick and I do come out. Don't forget, if you like the content, folks, please hit the like button. It's your way of letting us know that today was worth your time to spend some time with us. And if you would like to, don't forget to share this live stream right now. Put it out there to all of the people who are in your social circle. I would love for you to put it out right now. Peter is here from Belgium. Jose is here from Brazil. Tom is here from Ontario. No, however, the D Energy. What D Energy? I thought it was more like ham radio. I got Buffalo. Man, my heart goes out to all you guys in Buffalo with what happened over the weekend. It was pretty senseless, but my heart goes out to you guys in Buffalo as well. Honolulu.
Yeah. Bionic tuning in from Honolulu here today.
Thank you, Go. Thank you. Honolulu. There we go.
Blah, 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 blah.
Blah, 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 blah. All right. So we're going to get right hot and heavy into it. I got somebody here from Seattle and from Utah. Tom on Facebook says, Winchester, Virginia, really learning a lot in the training vids as well as the daily updates. Way to go. For those of you who are not subscribers, we give a lot of insight and market guidance every single day in our software. I'm going to tell you later how to take advantage of a trial for dirt cheap. All right. Patrick, I'm going to start off, just get into the story, some stories that I have. Starts right here. So Joey said I didn't have to do anything. Hold on. Where is it? Scroll down. There we go. Fed Powell vows to raise rates as high as needed to kill inflation surge. Do you think, I got my own opinion, but do you think that this is feeding the inflation skitters?
I mean, you look at everything for the last year and a half. Powell has been saying, oh, it's transitory. Well, now he's backing off from that. Every single thing he said over the last year and a half, he continues to back up from.
Okay.
And I mean, I was joking to Steve about it today. I asked him if he knew of any way of shorting the faith in the Fed. And it's a joke, but at the same time, it's being serious because every single time he comes out and he keeps sticking by his word, then he backtracks a few months later, is losing faith that the Fed has this under control. The Fed can do something about this, or that they have a real plan in place and they have a real understanding of what's going on. So no, I mean, I think he will, because I mean, as we know, they have no other choice. They've been printing money for so long that they have to figure out a way of figuring out their balance sheet, getting their balance sheet back on track. So yeah, I mean, will they do whatever they need to? Yeah. Will it hurt the economy more than what they're leading on for? Yes.
All
That's
right,
my
so
take on it.
I'm going to lead that into what Asif says. He says, no, this time inflation is due to supply issue.
And I would agree with that.
I think that that's part of it. I think the other part of it is all of the fiscal monetary policy. I think
Well,
that
so, I
plays a
mean,
big role.
you and I talked about it a couple of weeks ago when we had the Fed. We were talking about the Fed announcement that we had on here. And I said it then, they're trying to raise rates to fix the supply chain issues, and that's not going to do it. So you're going to see the Fed continue to increase rates, hurting the American economy more and more, and the supply chain issues aren't going to even be fixed. There's nothing that inflation or increasing interest rates
and
does.
That's
fix supply chain
absolutely
issues.
correct. There's nothing we can do for that. There's nothing that now, we were just talking about this a moment ago. There is one thing that we can do to help at the gas pump. And what is that, Patrick?
Start producing in the US. We've said it. I've said it on here for at least a few months now. So
I don't disagree with that. And it sounded like we were going to open up some more of that. And then the president just pulled back from that, saying, no, we're not going to do that. And I think that is a positive step from a supply chain, from an oil perspective, that could help to bring gas prices down and be able for us to start being able to be an exporter again of oil, especially to the EU, where they were dependent on Russian oil and they're not getting it now, or it's going to be slowly but surely cut off. That gives us some viability to help the EU in a way where we got a lot of oil, folks. We cannot, John says, well, we cannot produce in the U.S. because of who. And again, as we were getting ready to get into this conversation, this is what I didn't want to have happen. But I know I'm seeing it. I'm seeing it both on YouTube and on Facebook. That's not where we wanted to go. I'm just putting it out there that is a way to go after the supply issue from an oil perspective. Now, there's a lot of other supplies that we can't, or supply issues that we can't stop. Countries like Ukraine export a lot of wheat. If they're not being able to do that, it's going to affect wheat. In India, same thing with them. They're stopping it because they got some kind of drought issue going on. So it's not just oil, but it's all of the other things that we get from other countries that's being affected. So I hear you, Asif, that about the supply issue, but I still think it's got a lot to do with the money that's already out there. Debbie says, even if there wasn't a supply issue, where's the money going to come from to pay for it? That's another whole scenario right there. When you say, where's the money going to come to pay for it? Pay for the oil, drilling our own oil? There's the big companies are out there willing to drill oil, but it's not in their wheelhouse right now to drill the oil because we don't have an accommodative government to be able to go drill the oil. A lot of overregulation. There's a lot of stuff. Go ahead.
Also, you have to keep in mind, right now we're seeing what's going on in Washington being played out in politics rather than just level-headed what's best for the American public. And I think, especially since we're in an election year, that has a lot to do with it. Instead of just focusing on how to fix the issues and getting it done, they're going to be playing politics about it. So they have talking points, throughout the primaries coming up. So, yeah, I mean, as much as we don't want to talk about politics, and I'm not trying to get into that conversation,
yes,
but,
you are.
It does. This is more politically created more so than anything else right now.
I like this. John says, Fed Governor Glenn was right about inflation not being transitory and that spending money like they were doing was going to be a huge problem. Absolutely. Ever since they said transitory and they've been using that word, and both of us have been on board with that, it wasn't transitory. It wasn't transitory. And now they're paying the price. And the whole idea, they were dovish because they wanted to create a soft landing. I don't think a soft landing is in our future at this particular point in time.
Well,
And
now he's stating what? That we could possibly get a soft landing with minimal pain. Wasn't that the term he used? Minimal pain?
Minimal, yeah, it ain't minimal. It ain't gonna be minimal, folks. I've been talking about a recession. I've put out videos about the differences between a recession, deflation, disinflation. If you haven't watched those videos, go check them out. But I think we are headed for a recession. So now, let's move from that. Next story is, and this is big. All right, Dow tumbles 1,000 points Wednesday. Wow, that's huge.
So one other thing real quick, Glenn.
Yeah.
A lot of the production across the globe does come from China.
Okay.
I think we can all agree upon that. They were starting to come out of the lockdowns for a little bit, and when Powell was saying it was transitory, and then all of a sudden they had the outbreak in Beijing and then also Shanghai that they're going back into lockdowns. That was kind of unexpected. And so I think that's ever since that started happening is when we saw Powell start changing his wording from transitory to, now we're just trying to get it to go down a little bit. We're trying to suppress the inflation. So
all right, I'm finna shut something down real quick because Donald Rietzman says, yesterday you guys were all go. Today you're all stop. When the hell did we ever said we were all go? No. I'm shutting that down now because that ain't cool. Where did we say we will all go ever? If you look at the guidance, if you're a subscriber to the VectorVest software, where did we ever say we will all go? What did we say? Get ready. Not one time did you hear us say in the views that we will all go. So that ain't the case. All right, I'm putting that up there. Yesterday you guys were all go. Today you're all stop. That is not the case. And as a matter of fact, wow, Patrick. As a matter of fact, everybody who's a subscriber to the VectorVest software, I want you right now. Did we ever say that we will all go? Type a 1 if you said that we said that it was all go. Type a 2 if we said to get ready. I want to see what you guys all heard because maybe Donald heard something different than we said. All right, maybe Donald heard something different than now. Lola says we did say it was all go. I'm looking for the rest of the people, both on Facebook and on YouTube. Did we ever say it was all go? I'm asking the room for the people who are subscribers, how many? I know the primary wave set up. I'm with you there, Betsy. And even though we said it was okay to buy when the primary wave turned up, did we get confirmation the next day?
Hey, Glenn, can I read you now that we've had time for them to put in their answers? The guidance from yesterday?
Go ahead.
Prudent investors may buy stocks long only if the market is rising. Hey, guys, is the market rising today?
Holy smoke. So for anybody in this room that's saying that we said all go, oh, heck no. I'm not taking that.
That's
I am
so
not accepting
everything
that.
can be backed up and verified, man.
And it's a footprint in the sand.
Technology, everything can be verified.
Absolutely. So I'm not on board with that. You know something? And I'm the first to shoulder something that we said and be able to go, all right, maybe, but nobody in VectorVest said that we will all go. So Donald, and there was almost somebody else that said that we said that. So you're saying go all in? Don't start, Mark.
Yes, Mark. Yes, Mark. Yes, we are.
Don't start, Mark. Don't even start.
Take everything you can and dump it into AMC.
And I'm gonna shout out. Don't start that either. So I'm gonna shout out to somebody in here. Energy is not here yet. I want to shout out to him, but I do want to shout out to MH. I saw that he's here. When last Wednesday when you weren't here, I did a little run through on showing how we can call bottoms. MH sent a response in the chat after the video, after that presentation, and said, all right, I took the trial, and after you went through how you can call a bottom. And still, even this time, MH, I saw you were here. So even at this time, we still never said that it was all go. We said to get prepared. Never once did we say all go. And then on top of what Patrick just read, was the market going up. So Donald,
I mean,
yeah,
last time I
shut
looked
that
this morning
down
when I looked,
right now.
futures were all down about 1%.
Yeah.
And that was just before the market even opened today.
All right. And I wanted to listen to the people in the room. I wanted to listen to the people in the room because maybe we said something that I didn't hear or something along the lines. But as you can see, for the majority of the people, with the exception of one other person, yeah, we ain't never said that.
And as we all know, if somebody did say it, it was definitely Glenn. So just throwing that out there.
Whatever. And MH says, and I'll accept that because it's an honest assessment. Still not convinced you can call a bottom, but I'm watching those daily reports. There you go. All right. So and MH says you made a decent case. So all right, let's keep it moving. Yeah, I listen, when something comes up and it ain't right, I'm not gonna let that spread. I'm just not. That's not cool. All right. Gasoline, diesel prices rise to another record amid rampant inflation. Do you know that the average price of gas, it said $4.41. I saw $4.50.
The first time in history that gas has been above $4 in every single state on average.
That's crazy.
Yep.
That's crazy. And is that a supply issue? Yep. So I go with a SIF on that. That is a supply issue. There's definitely a supply issue. And for a lot of this, for a lot of people who are saying, where should I have my money? I still think energy is a place to have your money. That's what's moving. I think energy stocks are a place to have your money. Alex on Facebook says, I listened to most of the calls and they never gave a green light to go all in. All right, so here we go. Debbie says, I quit driving. Listen, you know something? You're probably not the first person out there who's doing that right now. I'm lucky that I live close to work. Patrick and I both live close to work. I'm thinking that maybe we need to start carpooling, bro.
I mean, I was thinking about looking up a farm around the area, around Mooresville, and find somebody who has a donkey.
Really?
Donkey's got to be cheaper than a horse right now, right?
Wow. Oh, you're going to go ride on donkey. No? Urgent. Is it too late to sell everything today or better wait for a small bounce back? Now, I've said this on a different live stream. I still think that right now, my personal opinion, I think because we are looking for a bottom, when will it come? All right. Can the market still go down? Yes. I think that the upside potential outweighs the downside risk. And I think risky to play to the downside. But then I got to step back a little bit and say, if the market's going down, you got to play the market to the downside. Man, it's a tough call right now. That's where, I know where you can find. Wow, I don't know what Mark is typing in. Mark, I don't know what.
Well, you didn't give a response to it, so at least somebody did. At least
somebody found all right. How about electric bike to get to work? Oh, you guys know that I'm big on electric. I'm big on electric vehicles. As a matter of fact, I just cut a video last night on Rivian.
For me, it's got to have 4 wheels and a full metal cage surrounding.
That's not a bike then, Patrick.
Exactly.
That's so not a bike.
Dude, driving on 77 every day, there's too many people texting and driving. Literally every other person is on their phone while they're driving 70 miles an hour down the interstate. I am not going to be on a 2-wheel bike with nothing around me surrounding or protecting me from those people.
Oh man, James, we're gonna look at the Bahamas portfolio today. All right, real quick, let's keep on going.
When's our live stream coming up in the Bahamas?
Soon. If we can make this happen, we need. See, Mikey says, screw electric cars. Man, I'm telling you, the demand for electric cars is increasing. Definitely increasing. Donald says, upside potential outweighs downside risk. Yeah, I think that we are so oversold, and I don't know for how long we're going to stay oversold. So I answered the question the best way that I could without locking myself into either direction. I think with the market being so oversold, it's riskier to play the market to the downside. Now, if you do play the market to the downside, I wouldn't be in stocks or contras for too many days in a row, because with a volatile market, signs of a volatile market is being down big one day and being up big another day. That's why I say the downside risk. If that doesn't make sense, I'm sorry. Unless unless Patrick, you want to add more to that. I think that with the volatility we have in the market, we had a big update yesterday, and look at what we got today. That's why
we're back down to the big update we had on Friday.
And that's why I say the downside risk outweighs the upside potential. All right, and you know something? Donald is right. In our jockey club, the blast-off day was Friday, but it didn't make it into orbit. Why? Because there's a lot of volatility, and just as quickly as the market went up is as quickly as the market goes down. I think we rebound tomorrow. That's my opinion. So what do you think?
I think we still go lower. I mean, This looks like a classic. You look at the last 3 months on the VectorVest composite. We have this same pattern every single time. We get a couple of days pop and then a huge down day to wipe out the last 3 or 4 days, and then it continues to move lower.
Well, look at that. Pop, lower.
Go back to where right in the middle towards the high marker.
Here?
Yep, you had a little bit of a run, you had a pop, and then bam. Then you came back down, started going up a little bit of a pop, and then bam.
So then when I say the downside risks, look at this. All right, I'm going to go short. I'm thinking, all right, forget it. I'm going short. Damn! That happens. All right, we're falling. We were up. We're going to be good. All right. I'm going to go short. That worked out. All right, we got this bound. I'm going to cover my shorts, get ready to go long. Bam! Back and forth. Thus, the statement of the downside risks outweighs the upside potential, and it keeps doing it over and over again. I still think just be careful if you're going to play the market to the downside. Just be careful. That's all I got to say in regards to that. So, Donald, as you ask the questions, I'm answering them for you. I'm definitely answering them for you. All right, the bull rallies are short-lived in a bear pullback. Let me put this out to a 6-month. All right, the bull rallies are short-lived. Bull rallies short-lived. Bull rallies short-lived. Bull rallies short-lived. Bull rallies short-lived.
I mean, look at the 3 and 8. 3 and 8 never even turned positive this time. Just like the last little uptick we had.
I'm just saying, be careful. Ooh. Because after each pullback, we get a promising up movement. And then it comes back down. Oh, man, we getting ready to... Oh, damn. Oh, we getting... And over and over and over again. We're in a bull run. I'm sorry, we're in a bear run. The bull runs are short-lived. So I'm just saying, just be careful. Because after every big pullback, we do get a rebound. That's all. Nothing more, nothing less. Due to market volatility, TradeStation suspends day trading at 3 p.m. Wow, I didn't know that. There's a lot of fresh air on the VVC to the next support on the weekly graph. All right, so I'm just putting it out there. The market still does have some downside, but it's definitely oversold, man. The MTI,
but as you know, from any technical indicator that shows overbought, oversold conditions, we can stay in overbought or oversold conditions for a while. Just because we get to that territory doesn't mean it's going to instantly reverse, start moving higher. So while it's good to know when you're in those zones, so you can pay closer attention for signs that things are changing, you don't go and close out all your short positions just because we get into oversold territory and instantly reverse it. You wait for confirmation for the change.
So let's ask this question. For everyone who took advantage of the downside and took advantage of these upsides, how many of you gave almost all of your gains back? Type of 1. If you didn't, you were able to get out at the right times and you didn't give all your gains back. Type of 2. I'm curious to know. All right, because Don is still on that whole upside potential and downside risk. But I'm wondering, how many of you gave your gains back? Type of 1. All right. Most people. Not everybody. All right. And I'm aware of that. Should we hold? That's a good question.
Should you dollar cost average, Glenn?
Oh, hell no. Oh, no, you shouldn't dollar cost average down. But I'm seeing more 1s than I see 2s, and that's cool. That's cool. That's why I asked the question. I'm just saying, on these bull runs, when we get excited, the bears just keep taking it back over and over, and then we get another one, and then back and forth, back and forth. I'm just saying, be careful, because as soon as you get in and you try to make that money on that bear side and you give it back, you get disgruntled. All right, you get disgruntled. Now, to answer your question, do you still hold? I'm loving the idea of having some kind of options play to protect your portfolio. Whether you put a collar on your portfolio or you buy a protective put, that's how you protect these gains. Now, how about
So
you buy?
speaking of that,
Yeah.
that's a good segue. The stocks that I brought to the table today, I'm gonna classify as Patrick's put picks.
Okay. There you go. I got out with my portfolio on the shorts when I'm 25%. If I stayed, I would have made more on my shorts. Okay. Listen, I am saying that from a market timing perspective, and let's go put on for those people who want to catch all the bumps and wiggles, we got a signal for you. All right. The primary wave. But even look at the movements on the primary waves to the upside, they're still very short-lived, with the exception of that one. I'm with the idea that we be a little bit more bearish in the market. I'm with that, Donald. All I'm saying is just be careful. All right, Donald says dollar cost averaging. I'm not doing dollar cost averaging. Rep says, why do most traders go all or nothing? I only have half of my cash. And absolutely, there's nothing wrong with that. Cash is a position.
So let's be clear about that. Not all traders go all or nothing. Just Wall Street Bets does their YOLOs and they go all or nothing. So that is not all traders. That is actually a very small group of traders, not the average trader out there. Let's be clear about that one.
I'm all in right now. That's just me. Why? Because I've got a couple of hedges. I got a couple of contra hedges to back up my whole portfolio on a down day. So I work out. I'm fully vested. All right, that's just me. I don't know about Patrick, but I am fully vested.
I got 50%.
Okay. Let's go to the next one. Dollar gains, stocks retreat as inflation jitters return. Dollar gains, that hurts us because people don't want to buy our stuff because it's more expensive when the dollar gains. Anything you want to add to that?
I mean, well, so being an econ major, I get that. I get the case that they make saying the dollar hurts us from a globalization standpoint. But then again, you look at the news, they're saying that we're starting to see reverse trends of globalization. I think that's a good thing, because if we had the supply chains done here in the US, we wouldn't be having to worry about trying to import and trying to worry about this whole global supply chain issue that we got going on. But also, while I understand that case from my perspective, a stronger dollar isn't a bad thing, because that reduces the price. You use less dollars to have to buy stuff. So I personally don't mind seeing a stronger dollar. Now, the Fed, who goes off of macro policy and a lot of theory, I get why they do that, because obviously a stronger dollar hurts them for their money supply control that they have. But from an end user, I don't mind seeing a little bit of a stronger dollar. That should help actually cut inflation a little bit, because your dollar doesn't have to go as far.
That's a good answer.
But just my 2 cents. I know it's not a popular one, but
that's okay. I like that we can differ. John says, why doesn't anyone go short anymore? I feel like I'm the only person who shorts these days. Not everybody's got the portfolios to be able to go short. I mean, I
John,
think
if you're looking for short, make sure to stick around. I got my put picks for today. Not shorting, but using options, so that way more people would be likely to take advantage of them.
Oh, Mickey or Mikey on Facebook says, is Walmart or Barry right now?
No.
I don't think so. Oh, wait, where's Patrick's beard? Where's your beard, Patrick?
I left it.
And Mikey says, with the weak dollar, my commodities are rocking. I'm playing wheat. That's one of my commodities that I'm playing. I'm playing wheat. Rep says low volume. I'm right on my mic, so I'm not sure where that's coming from. I like smooth Patrick, says Miss McClintock. All right, I'm gonna keep on moving on. This is Patrick's story. And I didn't do that thing that you told me to do to get rid of that. So
Oh
sorry.
man.
Yeah, I know.
You don't have this browser.
Go ahead, talk about it.
Do you? So yeah, this just basically is a leadway or segue into Bristol Myers. One of the things I've been looking at for today, trying to find something that could be a money-making opportunity. It's been, there's a lot of things going down. Markets aren't looking great. You haven't really had a whole lot of positive news, so it's, hard to find something. This is one, while it is a bearish story or a bearish play, it's a great way to make money off of it. So basically, Berkshire Hathaway, everybody's familiar with that. Warren Buffett took his positions off on Bristol Myers and or AbbVie in Q1. And then when we go look at the charts, that's really where I wanted to get into the story, because the chart is showing a potential great opportunity for short trades or for bearish trades. With majority of stocks going down a lot over the last 4 or 5 months or so, I was looking for stocks that have been holding up but have deteriorating technicals, fundamentals, all of that. So that way you can find potential ones that have been going against it, that are getting weaker and weaker, that are having a harder and harder time fighting against the overall trend of the market. So that way you could take advantage of them, play them to the downside when you see those signs of confirmation that they're starting to bust. So if we want to go get into VectorVest 7, we can take a look at the chart of that one. And I'll just wait for your handler to set that up. There we go.
I got it. Shut up.
Are you controlling right now?
Yeah.
Whoa.
So before you go look at your picks,
yeah,
I want to show you something. I wanted to do this. Go back to last week. Your picks. What is that? Patrick's picks. That was last week.
That was 2 weeks ago. I wasn't here last week.
Was it 2 weeks ago? Oh, did I have picks then? Then I must have. Those must have been.
Just trying to make me look bad.
Was it 2 weeks ago that we did those?
You were trying to make me look bad intentionally here, Glenn.
No, not actually.
I'm hurt.
Shut up. Let's go see what they look like. 2 weeks ago, the down, but not nearly as down as much as the market. And that was my picks. Patrick's picks. It was 2 weeks ago. Let's go through, see what quick test. What the heck happened? 518. Oh, did I not go back in time?
I broke even. Haha.
Whatever. It was 5-4. I hate you. 5-4. Let's quick test them. They were down and they were down bigger. For some reason, I thought these were over the last week. Nonetheless, let's talk about your new picks. And I wasn't trying to make you look bad. I would never do that. All right, here's your picks.
You didn't put in Bristol Myers.
Oh, I didn't know. What is it, BMY?
Yeah.
Okay. There you go.
All right. So these three are my Patrick's put picks for the week.
I like that. Patrick's put picks. Say that 10 times fast.
Yeah, say that 5 times fast. So both of them, 2 of them, as you can see, Merck and Bristol, most likely you're familiar with, comes out of the drug ethical industry and sector. And both of these have good fundamentals, but as we've seen, even the best stocks are going down. So I was looking for ones that have been going up when the market's been continuing to go down. That way, you're looking for deteriorating undertones from these stocks. If we go ahead, we'll graph them. I don't have control, so I'm gonna have to get control while you're setting that up. There we go.
You got it?
Should be. All right. So these are not gonna be day trades.
What time period you want?
Oh, I can't control it.
Yeah, because Joey's got the mouse. What time period you want?
Set it to a 3-month.
What indicators you want?
I want earnings per share, GRT, and MACD. Do you really not have MACD in that huge list of indicators?
No, I don't like MACD. I think it's a stupid indicator.
Well, it doesn't like you either.
Fine. MACD. All right, talk to me.
All right. So what we're looking at, zoom out, 6 month. There we go. Almost. There we go. All right. So with Merck, what I was looking for is, stocks that have um, fundamental and technical starting to decline while the prices continue to move higher. So with Merck, I see the big red warning sign from yesterday's price action. You had a big update, a lot of selling pressure, stronger volume relative to what it's been trading at recently. So therefore, you see that tall upper wick indicating the vast majority of that volume comes from selling. Then today it's on a down, moving lower with the overall market. But then you also look at earnings per share. Earnings per share lower over the last 6 months. So that's what I'm talking about with the fundamentals starting to deteriorate a little bit. And then from a technical play, you have the MACD as well. While yes, it's still in positive territory, the stock's been going up, but you do see potential bearish divergence. MACD is hitting a lower high now than it was at that last run up. So you're seeing weakness showing from the MACD from technicals. You're also seeing the weakness in the earnings per share. And so, basically one stock that's been going against the overall trend now starting to show signs that it's slowing down, having a hard time continuing to fight that trend. And with yesterday's candlestick, today's down move, as long as it continues to move down, gives follow through from yesterday's price action. This could be a great put option to look at. It's a very big name stock, liquid option chain. So yeah, I like this one from what I'm seeing from a technical standpoint. And then also when I see the decline in earnings, that's also something I'm looking at as well on this one.
All right, I want to answer a question. Someone, Rep Jefferson says, "Why not DCA?" I want to hear your take on that.
Mine?
Yeah.
So where to start on this one?
Yeah,
With
I'm
dollar
with you.
cost averaging, I get the appeal of it. I see it, talked about a lot from major YouTubers,
Mm-hmm.
newer people writing these articles for different companies. And, it sounds great the way they make it sound. Oh, I'm just lowering on a stock that I like, I'm lowering my price average on it.
Okay.
Then all of a sudden, when you have somebody like us here at VectorVest that have worked with thousands of actual individual investors and seen, their actual outcomes from when they followed that kind of guidance, you see the potential issues that it can cause. I talk about this. I've told this story a few times, but the story I always go back to is a Canadian lady I worked with many years ago. She had a advisor, a broker that was managing her portfolio, and they found this stock that he sold to her that he told to her she liked the idea of it. She liked what the stock was doing. And so he bought a position in it. Then all of a sudden the stock went down a little bit, $5-10. And then the broker called her up, said, "Hey, that stock that we were just talking about a few months ago, well, it's down a little bit now, but it's cheaper than what it was before. We should put more into it." Well, long story short, 6 months to a year later, I think roughly, it's been a few years, so I don't remember the exact details on how long she waited. She called into VectorVest to want to cancel because she didn't have an account anymore. What had happened is over that course of the year or so, her broker kept doing this over and over, rinse and repeat, and got her 100% invested pretty much from $25 Canadian roughly all the way down to about $2 is when she called in, and all of her portfolio was in that one stock. I ended up working with her for almost a year afterwards to help her, take what little funds she had left, invest it, learn the proper techniques for investing, and learned how to get her portfolio on the right track and started to grow it again and getting back, not, in that 1 year period, not everything that her broker had lost her, but, started to at least have a portfolio again, rather than just being left bag holding a stock that, was a poor stock. So that's just one. That's the one that sticks out in my mind the most. But I've had countless other experiences where similar situations have happened, where I've seen firsthand individual retail investors get blindsided. They don't realize it. They get over leveraged in one position, and it completely destroys their portfolio. and leaves you there standing there scratching your head saying, what do I do now? And feeling hopeless. And so, yeah, why these guys on YouTube and these other big promoters may say, yeah, it's a great way. If you like the stock, then you should definitely do it. But in actuality, that doesn't work out typically that way. So yeah, that's my reasoning for not dollar cost averaging.
And Patrick and I both have worked on the phones here at VectorVest before we moved into the education department. So now, M8 says, yeah, but what about if you have a predetermined amount to invest, and when the S&P drops 25%, you buy a chunk, it drops 35%, you take a bigger bite. So
then you're still losing the whole way down. You're catching a falling knife.
So now let me put that into another terminology. You buy this, let's leave it a stock at $100. All right, you're in it, the stock drops down to 90. Well, I liked it at $100. I'm going to like it at 90. It goes from 90 to 80. Now you're 20% down, and you say, well, I liked it at 100, I liked it at 90, I liked it at 80, and now I'm going to buy some more at 80. And then let's just say it goes all the way down to 50. And you say to yourself, well, I now leverage myself into a better price. I drop the price, my average price on the stock. That's fine. How much does that stock have to move before you get positive in that portfolio or in that stock? A lot. Now, let's just say, and you're okay with that. All right, you're patient enough and you wait with that and you go, okay, I can do this. How about instead of tying up that money and throwing good money after bad money, why not put your money in stocks that are doing well now, and that stock that you think is going to go back up, get into it when it's starting to move up. You can still buy low and sell high without buying high and buying lower and buying lower and buying. That money is tied up. So you said, yeah, 10 or 15 years from now, it's going to be up. All right. Do you want to tie your money up for 10 or 15 years waiting for that stock to go back up? And if you do, that's on you.
You would really come out with a negative return at that point.
Absolutely. And you can't show me the math that says what Patrick is saying is wrong. I don't know what math you can show me that disproves what Patrick just said. So I got a friend who manages money for people. And his goal is always just buy and hold because it's going to go back up. When 2008 happened and stocks got beat to hell, it's going to come back. And it did. 10 years later, it did. Who's got that time? Unless you're younger, I ain't got that time.
So MH,
I'm closer to death than I am to birth. I ain't got that time.
And Glenn, don't forget to address the fact of compounded rate of return, because that's something I don't think they're looking at. Yes, you may, if you're buying and holding, that's all your cash tied up in that one position for the next 10, 15 years to get back to break even, maybe be a little bit ahead. But when you compare that to the rate of return you're going to get, when compounded rate of return you're going to get, if you're, taking your profits and then reinvesting those profits into new positions, increasing your size of your positions. I mean, it's a simple math to look at and say, I'm losing so much potential money by not taking advantage of compounded rate of return. So yeah, I mean, if you have 10 to 15 years to sit there and not do anything and just, forget about it, great. But
not everybody can, and not everybody's got that kind of money on the side to do that with. And when people have lower dollar portfolios and they hear this and they're like, oh no, we can, and they hear this and it makes it sound beautiful. Those are the people who get screwed because they lose all their portfolio. Now, MH, on the other hand, could have a lot more money in the market and could have, like he's saying, I'm talking about my long-term portfolio, not a separate fund for short-term trading. I got you. But not everybody's got that kind of wealth to be able to do that. And they're looking at investing in the market now with the money that they have. I'd rather them be able to effectively grow, even if it's 5% a month. That's doable, by the way. Even if
think about it. If you had, let's say, $100,000, you take your $100,000, you put it into cash right now when, we gave that confirmed down back in November. You wait for the market to tank, let's say 50, 70, 80%. Then you put it in like we did back in March of 09, telling us to get back in. You get back into the lows. Think how much more your portfolio, your long-term portfolio is going to be ahead when you're buying and holding from the bottom rather than sitting through a major market recession or a major market crash. So, I mean, to each their own. If you want to do that, by all means, go for it.
But we don't
what
push
we
it.
really advocate for? Definitely not. But I mean, you can lead them to water. You can't force them to drink. Simple as that.
So Patrick is right. There's a lot of people, a lot of YouTubers out there that will talk a lot about dollar cost averaging. The choice is still yours. But for those people who are thinking about it, Maria said, the thought has crossed my mind. I think that that's what you're talking about. All I'm saying is just be careful with it. Just understand you're putting good money behind bad money.
And understand the majority of people out there that are big promoters that tell you to dollar cost average weren't investing in 2007, 2008, weren't investing in 2000. They've never sat through a major market recession. They've been trading for, since COVID crashed. They're the COVID traders that are
the
trying
new
to get
people
famous now. And they've had an easy market to take advantage of. So yeah, gotta be mindful of that.
All right. So I wanted to answer that. Let's go to your next stock.
All right. So MRK, next one up, Bristol Myers, as we talked about. Berkshire Hathaway clearly selling. Right now you have a double top. Earnings are steadily decreasing. With that double top, you look at MACD. MACD is steadily deteriorating as well. So it's losing momentum on a short-term, long-term basis, but you're also having the fundamentals decaying as well. So from a put option standpoint, I mean, this one seems like a pretty easy play here. Thoughts?
Want me to go to the next one?
Sure.
Okay.
If you have nothing to say about it.
Oh no, I agree with your put plays. I love that the stocks that are going to go down the fastest are the stocks that have been going up the fastest. So I'm with you on your put plays. 100%. Earnings per share is falling. Earnings growth is falling. At least on the other one, earnings growth was still going up. But at least on the Bristol Myers, both earnings per share and earnings growth are both falling. And I'm with you on that. And it's leveling out. I'm with you on 110%.
All right. And last one, but not least, AVD. So this one, a little bit different. They make a fertilizer to help with, crops that are doing poorly. So right now, it's gotten a little bit of a boost with the drought going on in India, with all the talk about wheat and everything. But at the same time, if you look at the fundamentals that VectorVest has on it, it has a below 1 RV and RS. The CI is terrible on it. You can see that it's clearly hitting a pattern of lower highs since that most recent high. Growth rate, while it is up a little bit recently, it's still down overall over the last 6 months. So the way I'd play this is, a put option definitely would be of interest. And then use a trend line, connect those highs, and as long as it stays below that trend line, then that put stays in place.
Oops. There it is.
So yeah, those are my three put picks for the week here today.
That's a nice little trend line to play off of in case the put stops working. That's a
so
great
that would be your trigger to say, okay, maybe it has room to continue to go up. You cut your position at that point, reevaluate it later on. But with a company with poor fundamentals, overall, it's a speculative play. The MACD is declining quickly right now. Price action shows a pattern of lower highs. So this would be my third pick for a potential put option in the near future. Hey, there's energy, by the way.
There's energy. I'm put a big shout out to you. I was looking for you. Thank you for putting that video on Rivian on Reddit yesterday. That was awesome. Thank you for putting that out there, man. I thought that the content was at least decent enough to at least get people thinking. And I know that you're big on EVs, especially Vicinity Motors. So I wanted to say thank you very much for that. Here's something that came up, and I want you to answer it, Patrick. Where did I just see it? There it is. Where did it go? GME is still up 900% with no PE. Patrick's a GME fan. I'm more of an AMC fan, but I still think that they're both tough to be in. That's my opinion. But talk about that. GME still up 900% with no PE.
I mean, the SEC report said it the best last summer. Shorts never closed. And with the whole stuff going on with Bill Wang and the Tiger Cub or whatever it is, with his indictment and him telling the SEC they need to look into Morgan Stanley, you're seeing a lot of big brokerages out there losing their FINRA classification. These swaps are getting a lot of publicity recently in the news, and it showed how Archegos was basically able to utilize these total return swaps to hide their short position. Just that one player alone was short on, what was it? From what I've seen, I haven't been able to look into it to verify it yet, but from what I've seen on it so far, he had a 33% short position on FUTU. And at the time, the short interest was only showing 13%. So it shows the cracks in the system of these self-regulated, self-reported numbers that can't be trusted. So yeah, while yes, the short interest publicly shows that it's declined, there's no way you could have gone from 140% short interest down to 20% short interest without having a major spike in price. So I think as long as shorts haven't closed, then yeah, we're going to see it stay in these elevated levels. Does it match what the current fundamentals are? No, I get that. But at the same time, I think with the changes coming up, with the new products they're getting ready to launch, that's going to basically pull that Tesla move, where before Tesla was able to start, actually producing cars, they were hovering around that $40 mark. Then all of a sudden they started producing cars and the price just started going up and up and up until what it is today. I think that's basically the early onset of it. That was the reason that price was staying there, is because of short interest, and same situation with GameStop. So I think until we have more regulations on these return swaps, total return swaps in general, derivatives markets, there's not going to be a clear answer. Nobody's going to be able to give a clear answer of why it's staying there. But yeah, I mean, it just goes to show that these theories that, people of GameStop subreddits have been talking about and discussing for the last year and a half almost now, are completely valid, as everybody's tried to, mainstream media has been trying to knock them off and saying they're crazies and nobody's paying attention to them anymore. And these guys are just conspiracy theorists. Well, they're starting to come out now saying, oh, wait, actually what they were saying is true. And these things do happen on a regular basis in the market. So, it doesn't really look so much like conspiracy theory now that you see what's going on with Archegos. So
do you think that the SEC that this comes to a head, or does this just drag out for years and years and years? I'm on the other side. I'm an AMC fan, and a lot of it happens to do with price, but I think both companies are trying to pivot to do what they can. And I think GME is doing a better job pivoting than AMC. There's no ifs, ands, or buts about it. I can't deny that. All right. But I think that they are tagged along together. They have been, because those are the two meme stocks that were very much talked about as they made their historic rises in price. So they really are, and Patrick hates that.
I'll give it to you. Yes, they probably are related somehow in total return swaps. I've even shown you the proof of it when I did that video last year sometime. There's swaps out there that you can find in there that have them bundled together. The retail baskets that they have in these return swaps. So while, yes, if GameStop goes up, AMC may go up as well, but that's if AMC can stay afloat, whereas their cash burn is going crazy right now. They're going to have a hard time making payments in the near future if they can't turn that around.
They're going to have to dilute shares. They're going to have to do a split or something. They're going to have to.
And so if they don't do that, if they don't get the voter votes, to to dilute their shares even more, what happened? So, but yeah, I mean, you saw it when Bed Bath & Beyond announced that they were going to speed up their turnaround plan, where they were going to increase the amount of stock buyback they were going to do. And Bed Bath & Beyond shot up like 30% one day after earnings, or after the announcement. And then you saw AMC, GameStop, all those take off as well, off of no news, literally no news. And it's all because they're tied together in these types of return swaps that the average person, even not the average person, even some of these institutions don't even know what's in some of these return swaps. So, I mean, there's a lot of secrecy in these return swaps.
There's a lot going on behind the scenes that we don't see, and what we feel is there, but we don't see it. And until it comes out to the forefront, I think both of these stocks are going to be stuck in the quagmire of just speculation. Why is this not going up? And you're right. Patrick says there's nobody can give you a real answer to it. We can speculate as to why, but they're both way overshorted. GME more so than AMC, but they're both overshorted. Something needs to come to the forefront to get those shorts off of those stocks.
And you have seen, though, that DOJ, FBI, and a few others are going after the big institutions now, the investment firms. So these guys are starting to get indicted. And, now that you have all the issues coming up with Archegos starting to come to light as well, we're starting to see slowly but surely that government bodies are potentially going after these guys for what they're doing. I read an interesting article. Well, it was a write-up for a law journal, and they were, basically making a case for these return swaps should be technically illegal because they're just using them as ways to skirt current regulations without having to report them. So, yeah, I mean, I think we are starting to see a change, and we are starting to see more government agencies paying closer attention and starting to actually make moves on this finally.
All right. I like the conversation, bro. I'm going to bring in my picks. I went the other way. I'm looking bullish. I think Zim might be one of my stocks. Zim keeps coming up. Zim is one of my stocks. All right, so I'm going the opposite direction in stocks to look at, but notice that I got a hedge in here. All right, I got a hedge in here looking at the Qs. I posted on my Twitter. I'm going to give both of our Twitters. Patrick, what's your Twitter?
PR. You ask me this every time, and I always forget it.
You're supposed to know. It's your Twitter.
I know. I made the handle years ago, and I never look at it.
Sigh.
It's PR France 88.
All right, and mine is look for @Glenn Tompkins Jr. on Twitter, and I got a Twitter out there. No. Alex says Pat Picks needs to come back for sure. No. His picks are short. His picks are puts. My picks are the bullish one. All right. So someone said that Zim was a buy yesterday and now it's a sell. It is. It was a big move to the downside. So let's talk about that in a second. My money is going towards, if I had to build a portfolio, my money is going to where the money is being made right now. I personally do own San Juan Basin. That's the only stock on this list that I own. I did own Palantir, but I'm out. Zim, the shipping sector is still moving. I own Diana Shipping, DSX. Zim is in here. There's a lot of other shipping companies that are on the rise. A big fall on Zim, and I'm not sure why yet. I didn't look at the news on it. I think that if I'm putting together a portfolio, I got to have a hedge. But I'm going to be careful on this hedge because all it takes is one good day for me to wipe it. 15% today. 15%. Does that absorb a lot of the loss that I'm exhibiting today? Absolutely. That's why in my 5 stocks, I've got, 4 that are, one is a speculative play. I just think that Palantir has got a lot to offer. It is a speculative play. It does have positive relative value. They grow their earnings at a clip of 42%. It's just not ready for prime time. All right. But of what they do and the contracts that they get, I think that it's a good speculative play. EGY, San Juan Basin are my energy picks, and Zim happens to be my shipping pit. Zim did so well on earnings. I don't know if it was forward guidance. Let's do this real quick.
So Glenn, that just kind of going back to the dollar cost averaging.
Yeah.
Let's say you threw 90% of your portfolio in Zim and you only built 10% into SQQQ. Is that going to make up for that loss?
No.
Nope.
No, it's not.
Dollar cost averaging fails again.
All right. So 59 ZM Integrated Services, the earnings call. I don't know what the news was on it that made it go down. Earnings growth outpaced the impressive. I don't know. Return to the, unless these were people that were taking profits on the stocks. I don't know. There's nothing that I've got right here that tells me why it went down as much as 6 days ago. Gains. I don't have anything without doing more research to tell you why it went down today. I really don't. And I apologize for that. But if I were putting together a portfolio for right now, these would be my 5 stocks. So let's go do this. Right click. I've got two, again, I got 2 energy plays. I got a shipping play. I've got a speculative play. And then I've got something to hedge my portfolio the best way that I can with SQQQ. Let's view the stock graphs on all of these real quick. Put these on a 3-month graph. Let me take off this doggone, I hate MACD. All right. San Juan Basin.
Don't like nice things, Glenn. That's okay. That's
listen, this is why we can't have nice things. All right. A San Juan Basin. Couple of times below. This is a 20-day exponential. No, yeah, it's a 20-day exponential moving average. Went down and came back up. I think it's serving as a good level of support. I think you let it be. You let it ride. Right now, it's trading close to the 3-month high of $12.38. I'd let it be. Why? Earnings per share rising. Earnings growth rising. I still like the stock. And I don't know. I don't know if it was forward guidance that pushed it down, but something pushed it down. Michael says EGY, think oil with no debt and $45 million in cash, which I talked to Michael Silver, which after June, that all hedges is at 85, the rest of the market price of dividends. Again, hold on. Do I have dividends on these? Add the parameter. Let's go to dividend analysis. Dividend 85 cents. 85 cents. And let's go look at dividend. Let's go look at dividend safety. Not above 50. So I'd be careful with the dividend even on San Juan Basin. The dividend is there. It is 85 cents. It stayed there. It's been that way. It hasn't grown. It hasn't fallen. But I'd be careful if you're looking at it just from a dividend play. I like the price action. Bottom left, top right. Right now sitting in a channel, but currently above the 20-day, even though it's down today. All right. Next one is Zim. Zim is in a transportation ship, which the sector or the industry is moving. All right. This may not be a leader in it, but it did get above the 20-day. A lot of volatility going on here. Right here. Beautiful hammer formation, reversal above the 20-day, broke through a level of resistance and got stuck at another level of resistance sitting at 68.05. Same thing, it bounced off of that level of 68.05. Could this be a technical play of why it's pulling down? Could be. It definitely could be. This has been tested as a level of support and twice as a level of resistance.
So I will say this, Glenn.
Talk to me.
I noticed a lot today, transportation shipping has been one of the top industries or, in the top industries, it's still moving higher. I have noticed a lot of bearish divergences, though, with a lot of the transportation stocks out there.
Okay. Something to keep your eye on.
But there's definitely some signs of weakness. That and petroleum. But then again, it's hard to say when that bubble is going to burst in petroleum.
Absolutely.
So while there are bearish divergences, you don't react to it until you get confirmation of it.
And I got a level of support sitting right here at this level of the low if I want to give the stock a little bit more room, or I can get out earlier if it closes below the 20-day and wait to get back in again. Dividend is $19.50. Dividend safety, again, still not where I'd like it to be. I'm not using this as a dividend play. I'm using this more as a momentum play. Be careful with energy. XLE has a big red down candle today. You know something? Energy has been moving up so much that it needs to take a pullback. I still think that with oil the way that it is, and if we're not going to drill for any oil, it's going to still be scarce. Energy is still where the money's going. Gas prices going up, oil prices going up. I still think until something changes that, energy is still a good way to play. Michael says EGY does pay a small dividend and started this year. And since 1985, been in business to start this year is bullish to me with low PE. I got you. Patrick killed the Red Bull. I can't drink the Red Bull. I got a bad heart. That thing will make my heart pump out of my chest.
I didn't used to. It wasn't until coffee just started messing with me that I switched to it and don't have that anymore.
SQQ, I think, is a good hedge play. I drink more coffee than Patrick does. Patrick doesn't drink any, do you?
No, not anymore. I used to.
Yeah, I drink the coffee.
Coffee
Cafe
messes
Bustelo.
with my stomach now and makes me
I don't want to hear about it.
nasty.
Okay.
No, I feel all jittery and stuff with it. So
bad.
good.
A big down day today. SQQ, big up day today. All right, big up day today. I like this as my hedge play against my portfolio. There's EGY. It does pay a dividend. And here's one where the dividend safety is at 72. It's above 50. This I could play as a dividend play. Now, are there other stocks stronger in the petroleum? Absolutely. But I like the rising earnings. I like the earnings growth. I like the dividend, and I like the dividend safety. So, yeah, I got a little bit of back and forthosity going on. I got a solid level of support sitting at about $6. I got another level of support sitting at $5.54. Over the last 3 months, it's done a good job staying above that, with the exception of back here. So I got 2 levels of support to look at to give the stock some more room. Or right now, could I get out of it today because it's below the 20-day? Absolutely. Absolutely. And even with that, the stock went from a sell to a hold. Even with the big down day, it's still a hold recommendation. All right. By a chart that oil has a major support at $100, which each time it hit 99 to bounce right back to 115 today. I still think that oil is a good place to be. I honestly still think so. Posting about bacon is bad for your heart too, Glenn. I post a lot about bacon on Facebook, boy. Woo-wee. You know why? I love bacon. So my wife was away for the last couple of days for work. And she comes home last night, and this morning before I'm going to work, she says, "All right, baby, what do you want for dinner?" I said, "Bacon." She says, "Why did I know you?" She says, "How about I make some turkey burgers and put bacon on it?" "Nope, I want bacon with a side of bacon." And she just looked at me.
So
she just looked at me like this.
I don't think the viewers out there truly understand how much you eat.
Yeah, you probably
You are
don't.
constantly eating.
Whatever. That ain't the case.
That's definitely the case. I hear you munching through the walls every day.
No, you don't. Anyway,
you and Joey, man.
I'm so not listening to you. Joey ain't got nothing to say about this. Joey, don't say anything about this. Drew says he likes SQQ.
See, there we go.
What?
Confirmed.
What he said? Whatever. I don't like you right now either. SQQQ, Webs, and FNGD, Glenn. All right, so on my Twitter, I'm asking for what stocks are you guys looking at? All right, if you had to put a portfolio together right now, go check me out on Twitter. All right, have you tried bacon wrapped sausages? Yes, Roger, I have. Ooh-wee. Energy says I haven't seen him eat anything on air.
Don't worry, Energy, it's coming. Not yet, but it's coming.
All right, and I think the last stock in my list for today is Palantir. Again, this is strongly a speculative play. I think that this company keeps getting more and more contracts. It's going to pay out. It's going to pay out. It's going to pay out in what they do. So this is strictly a speculative play, but I like it, and I'm going to keep on liking it. I do like that it started fading the most recent gap down. We'll see what happens with it. All right. Let's go do
So one last thing, Glenn. While
What's
you're
up?
in the graphs,
What's up?
type in Boyle. We've been talking about energy. We've been talking about weakness. We've seen it, but it still continues to defy gravity.
Yep.
Pull up Boyle for me real quick.
Say again?
Take off the GRT, EPS, and put on MACD again.
All right. So EPS, GRT.
So this has been rocking and rolling. I'm sure everybody's familiar with
and
it.
this is a tough thing to not play.
But It's already in the graph layout. Just go down to the bottom.
Oh, was it? Oh, it was. Okay. Listen, I don't always
Folks,
know.
I got to deal with this on a daily basis.
Whatever. I'm going to come over and I'm going to fist. We're going to have
stochastic.
fisticuffs.
Put on MACD.
Oh, you don't want stochastics. They're both stupid. Okay.
Once again, I have to deal with this on a daily basis.
Whatever.
All right. So there. I mean, I think you can see it clear as day. You're forming potentially a head and shoulders on boil right now. You have MACD declining. This is one I didn't talk about today, but could be another interesting one to keep on your radar. With the increase in price, puts are probably going to be the best way to go instead of trying to buy calls on cold. This could be a really, really interesting play if we start to break down from this potential head and shoulders forming right now. So last pick of the day, I saw it, but since we've been talking about energy a lot, I figured might as well cover it real fast as well.
John says, did Glenn just say MACD is stupid? I'm not a big tech guy. I'm more of a fundamental guy. Patrick's more the tech guy. Patrick is more the tech guy. I'm more the fundamental guy.
And John, like I said earlier, some people just don't like nice things, and that's okay because that's what makes the world go round.
All right, let's take one last look at the market before we go. Holy smokes, two of them in that. How about S&P and NASDAQ are both at the 4% range. That's a bad day in the market. Let's go to graphs. There's the market timing graph. Let's go put it on intraday. I'm going to put it on 5-minute bars current day. That's the market today, folks. That's it. Holy smokes. John says, MACD is awesome like bacon. Nope, nothing is as awesome like bacon. All right. If you haven't hit the like button today, do it, please. Especially if you felt that today's conversation was worth your time being here. I think we talked about a lot of things, and I think it's a lot of things that, as I feel as a YouTuber, that we need to talk about it. We need to talk about it. Today is not a good day. I might actually have to use my AK. Today ain't going to be a good day. I'm not using my AK. I'm really not using. I don't have an AK, by the way. But next thing I want to do is just do this. All right, Patrick. As always, today was a good day for us. I like these new sessions on Wednesdays. What was your question, Alex? Alex says no one look guy, no reds. What are you asking? No reds in all the indicators. Oh, with the down day? All right, so you're saying, let me go back and put this back on. You're saying no reds in the indicators? You're right. It's not. Why? Let's go see. 53.74. Market's higher on a week-over-week basis. That's why. All of these indicators are higher on a week-over-week basis because they've been so beaten up. That's why. All right, Alex, that's why. So, yeah, there's still no reds. A big down day, but the reds are not there because the market had been. Will we be down tomorrow? Most likely we'll be higher tomorrow. We'll be working off of 54.03. Most likely we're going to open up tomorrow with a primary wave up again. And we still have a primary wave up even with all this down day. So that's why there's no red. That's why there's no red. All right, and that's why it's yellow. All right. Which one I want? I want that one. Look at that. I'm doing that all by myself.
Good job. Everybody, give a round of applause.
I'm going
to
Glenn. Punch you.
Smash that like button for him because he was able to use a computer today, folks.
Wow.
So
and Joey's in the background cracking up. I know he is.
I'm printing you a certificate right now.
Are you printing me off a certificate, Joey?
Yep. So proud of you. It's got a gold star on it.
Wow. I hate them. My problem is the sentiment of the market. Volatility sucks, and volatility is high. There's no ifs, ands, or buts about it. You look at the VIX. The VIX is telling you the market is the volatility is high. And there's something else. When you look at the top industries in our software, the top industry right now is ETF short. So that goes back to Don. Don is talking about my downside risk outweighs the upside potential. Yeah, I just think that the market is so oversold, and we don't know when the bottom is really, 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 really going to happen.
If only we
WMT.
could see when Powell buys his calls on SPY. then we
And
would
when
know
he
the bottom's
does,
in.
that's when the bottom kicks in,
Yep.
baby.
The
Woo-wee.
bottom is officially in. You heard it here first, folks. The bottom is officially in when Powell starts buying SPY calls again.
Yep. That ain't
There we
happening
go.
no time soon. Ain't happening. All right. Follow both of us on Twitter. We put a lot of content there. If you haven't looked at a lot of the other videos that are out there on our channel that Patrick and I put out amongst the people in our education department, we put out a lot of videos about what's going on in the market right now. That's what we do. All right, one more time, if you haven't hit the like button, do it now. If you haven't done it on Facebook, do it now. I want to see the likes get hit. All right,
Hit
we'll
it
see.
like your high school bully.
Yeah, hit the yeah, Facebook. Hit it like your high school bully. Hit that like button like your high school bully. There you go. Well, I saw one. I see two. All right, anyway, you'll hit it. All right. Do you want to close this out today, Patrick?
Sure. Thank you guys.
Wow. All righty then.
Everybody, thank you all for hanging out. It's been my pleasure. I'm glad to be back here again, once again with AMA. Tomorrow, don't forget, we do have our mobile coaching session back live. We're going to be talking about the DEW timing system. So I saw a lot of people talking about it here today. If you guys enjoy that, come see how we get the DEW on the mobile and see what it's telling us right now. That's at 11 a.m. And then, as always, we have Glenn talking once again for a while at 2 p.m. talking about some of the hottest things out there. So if you guys want to see Glenn continue to ramble, rant, and sing potentially for you, make sure to be here tomorrow at 2 p.m. as well. So on that, thank you all once again. Have a great rest of your day. Smash that like button if you haven't already, and toodles.
See ya.